All right. All right. You guys, let me know. Can you see me and can you hear me? Is the screen look okay? And is the stream back up and running? Welcome in, guys. Sorry about that. Crypto Wander 1, DJ Threep or R Pink, welcome in. Mr. Moon, welcome in. Yeah, guys, please hit the like button on your way in. Let's see if everything's good. Okay, thank you, R Pink. All right, guys. So, as I was saying before in the stream, we did actually drop down yesterday and we did front run our key liquidity grab at $83,800 into our macro 786 Fibonacci. And we're pushing up here. It does look like we could maybe get another high to take out yesterday's highs. And overall, I do think the scenario is a bearish scenario where lower targets are most probable. But we do know that we are going into the weekend. Weekend ranges usually form, and I'm thinking we could form a weekend range really in between this area or even down to that $83,500, $600 area. But we're likely to form a range within this area over the weekend. And overall, we do have to say the bias is for lower. If we zoom out onto the 4-hour chart, we have rejected from this general area of the bearish backtest of the Fibonacci channel. And guys, earlier in the month, about a month ago, right when we were coming into, when we were breaking and closing a weekly candle below our Fibonacci channel, I said that it's likely that this was the end of a wave 3 of a bigger move to the downside. So let me zoom out to the daily chart. And we're looking at that double 1-2 impulse to the downside from the all-time highs. And what we're looking at is a wave 1 here, wave 2, internal wave 1, internal wave 2. This is our big third wave here. And all of this is a fourth wave complex corrective move before dropping down to make new lows below 80.5K. Now, a month ago, when we lost and closed a weekly candle below this Fibonacci channel, I said it was highly likely that we would see a back test of this channel before ultimately dumping a 3-wave corrective move or a complex correction in a range. And if you guys remember, I drew this exact thing like this about a month ago saying we could range in here for quite a bit, seeing that kind of overall complex corrective move that could take a month or longer. And that is exactly what's happening. Also, a few weeks ago, as we were control and a golden pocket, this, right after we lost that range there, I talked about the scenario of seeing, let me get back to this chart here, of seeing this rejection from the 382 to come down to the golden pocket to come up again and hit that 0.5 Fibonacci. And I explained that was probable in this little clip here. So let me know, can you guys hear this clip? But it would invalidate this as an impulse, continuation of an impulse to the downside, and then we would have to redo all of our Elliott wave counts. So if we did come up here, we hit this golden pocket, I do think we would get a rejection, but I think we would also be entering back within our Fibonacci channel and back within our volume profile. We would probably just drop to back test that value area low in the bottom of the channel, and then we might be able to continue the move up here. Was to continue pushing up, and or at least a bigger corrective move. We'll see if that happens, but we're coming up to our 382 right now. We're coming up. And remember in yesterday's live stream, I actually mentioned this in yesterday's live stream because it's highly likely that we're going to start to range a little bit in here. And we have our ascending channel as well, where we've been trading in this ascending channel for a bit. You can see the ascending channel, the top of it is going to be right around your 382 and right around that anchored VWAP. So if we do see, this the area where like this kind of push up, reject from the 382 area, only to come down to hit your golden pocket, wherever that golden pocket's going to be. And then we could get a rise again, another kind of impulse again to hit that 0.5 Fibonacci, showing a bigger wave forward that's going to last a couple of weeks because we want our wave forward to be. We were looking at that scenario a couple weeks ago, and that is exactly what happened in this area. We hit the 382, we dropped to the golden pocket, and then we rose up to hit that 0.5 Fibonacci extinction, Fibonacci retracement, excuse me. We can pull that here and we look at that 0.5. That is where we rejected on that second test there. Now, this was a 3-wave corrective move. So overall, we can't classify this as an impulse. None of this price action within this range below our Fibonacci channel looks impulsive to me. It looks like a 3-wave move, rejecting, We could be in another 3-wave move here coming down. And then if we are going to reclaim yesterday's highs, we could be in a bigger 3-wave move to come up. But because our X wave did hit the 0.7 Fibonacci, we might see a lower high in this Y wave here, or potentially we could count this daily range in here a few different ways. It gets pretty complex in here, but to me, the overall premise is that this range within the last month or so that we've been seeing is a corrective range, and that we are going to dump down. The higher likelihood is that we are going to dump down to take new lows below 80.5K. So all we can do is zoom into this range, and we can trade this range until it breaks, and we can just analyze the different possibilities. As traders, remember, as traders, we don't necessarily have to know what the price of Bitcoin is going to do. If it's going to go up or going to go down, we mark out our key levels of interest within this range, and we trade whatever comes. I will say, when we did reject from 94.6K here, got that move down, it does look like this could still be an impulse to the downside. Wave 1, wave 2, wave 3. All of this could be another WXY complex correction in a wave 4. You get your 3-wave move up in a W, 3-wave move down in an X, and now we could be still doing a 3-wave move here in a Y to take out the highs, and potentially even come take out the highs of your W here before ultimately dumping down. And with us going into the weekend, that does seem a little bit probable here. So whether we are going to dump right now or make a higher low and then a higher high coming up to 90.4 to 90.6, or even we could even come up to hit that 91.3 resistance above us. Either way, the probabilities are that we are going to dump after that and continue the overall bigger downtrend. So we pull our volume profile, and we can look at this entire volume of this corrective range. We did lose the value area low yesterday, but we were able to reclaim that value area low and push up. And you can see we even pushed up above the point of control. We're back testing that point of control right now on that drop. So back testing the point of control, and with the barely front run of the swing failure pattern of yesterday's highs, we might see another move to come up to take out the highs at 89,500 and potentially even at 90,400-ish, 300. That's really what I'm looking at. And if you're a scalper, you could even trade this little range in here, looking at possibilities within this range over the weekend. We could be looking at support and resistance levels to trade that. But overall, I'm still prioritizing short positions at resistances, not in the middle of nowhere, at resistances, at key liquidity grabs. Short positions to bring us down not only to 83,800, but eventually even below 80K to continue the overall larger daily impulse to the downside. All right, let me check the stream. Let me check the chat here. Guys, is everything looking good and sounding good? Sorry about that little mix-up with the stream software. Jawfuel, welcome in, man. Yes, thank you. And Glasshopper, welcome in, Mr. Moon. Let's see here. I can't believe the Sol trade worked out. Oh, okay. So Solana trade, which Solana trade are you talking about here? Solana, I mean, I still think Solana is continuing in this descending channel here, and we are going to just continue trading within this descending channel until we come down a little bit lower. But right now we're trying to reclaim the value area low of our pretty much 2-year long range. It's a couple months short of 2 years, going back to March of 2024. But you can see we deviated below it over the last couple of days, got back above, and now we're trying to locally confirm a flip to support. And if we can, we might be able to actually work our way up to that 135.5 area before seeing continuation down here. We'll analyze that. We can look at that descending channel. That's going to be a resistance because it has been rejecting us. And until we see a breakout of this descending channel, we could just say this is our trend. This is our trend locally over the past week. And it's likely that we could just continue kind of trading within this trend. Let's see. Do I have that channel on the charts? There we go. Yeah, and let me Adjust that channel. We are coming pretty much up to the highs of the channel right now. Much love to you as well, Joffield. Thank you for being here, man. Begin having a lot of fun. Yeah, Telegram is awesome, guys. If you are interested in joining the Telegram, it's free. All you need to do is sign up with BYDFI using my affiliate link in the description, and then deposit $100 into the exchange. Once you've done that, first of all, you'll get 20% trading fee, 20% discounts on trading fees with BYDFI if you use my affiliate link. You'll get a 50% deposit bonus. If you deposit $100, you can get 50% deposit bonus. They're also offering up to $8,100 in futures trading bonuses. And if you deposit some of the larger amounts, you can get increased discounts on your trading fees. And you can earn, 20%, 10% deposit bonuses, initial deposit bonuses. But the Telegram, if you want to sign up, the link is in the description. Once you click the link, first you have to deposit $100 into the exchange. Once you click the link, type in /verify in your user ID, which will be right up here, and that'll get you access to the Telegram group. We really are building a great community in there. Give you guys my analysis throughout the day on Bitcoin. We also look at trade setups and some other coins. You can tag me in the general chat, ask me questions on certain probabilities or trades or trade setups, stuff like that. But yeah, I'm glad, Joffiel. I'm glad you're having fun in there. We do have a good community and some really good traders in there. Hey, Divine, could you check if this move up is sustained through open interest? Yeah, we'll check. Let's check that open interest right now. So what we've seen today, so yesterday's lows were right in this area. Now, as we were pushing up at first, you can see our open interest was decreasing here, a decrease in open interest, and we were rising overall in the CVD. It was a little bit of a short squeeze that we were seeing. A lot of people were shorting. Look at this last little bit that we saw right here. A lot of people were shorting. So let me clean this up here, and I'm going to zoom out to the 15 minutes so we can get a cleaner look at this. All right, so you can see in this little last leg down yesterday, right in here, our open interest was pushing up here. So those were fresh positions coming in. And it was a mixture of long and shorts, but mostly short positions. Our CVD overall was decreasing. So we saw a lot of late shorters coming in near the bottom of the move yesterday, near the bottom of the rejection. And sure enough, what happens when that happens, when retail shorts the bottom of a move or the top of a move, it often reverses trapping those people and causing a little bit of a short squeeze or a long squeeze, depending on which direction you're going. So you can see this push up here that we saw this initial push up was a short squeeze. Open interest was decreasing here. We had long positions stepping in, but those weren't fresh long positions. You'd want your open interest to be increasing if those were fresh long positions. They were the late shorters starting to get squeezed out. We saw that short squeeze continue for a bit. And then what happened earlier today, and a little bit depending on where you're at in the world, but you can see we've been rising steadily in open interest. That means new positions are opening up. New positions were opening up. Some of those positions at the very beginning in this area were long positions. So we saw the move start. Actually, no, not even there. That was part of the short squeeze as well. This was part of a short squeeze. But right about in this range right here, we saw new positions opening up. Those new positions were short positions. You can see because our CVD is decreasing in that general area. Let me show you that. CVD going down in this area, in this range right here, but our open interest was increasing. So those were fresh short positions coming in, and that was near your golden pocket, near and around your golden pocket. Well, we were able to squeeze those positions. We got a push up. Actually, more longs ended up stepping in. You can see all these fresh longs. Fresh longs ended up stepping in. We got an itty bit of a short squeeze for about an hour that started that move up. And then really throughout the day, you can see new longs have been coming in until about the last hour or so. New longs have been coming, or new trades, not new positions have been opening. But if we look at our CVD from the highs of this little price action here, as this sideways range was forming throughout the day, shorts were stepping in. Fresh short positions were stepping in. And the thing is, those short positions, to me, didn't make too much sense because those fresh shorts were stepping in. Let me get over here a little bit. Let me change this to the 15-minute to match our, not 15-second. in this range right here, we saw a lot of fresh shorts stepping in. And to me, it didn't quite make sense because we were above the golden pocket. Let's pull that golden pocket. Let's pull that 786 golden pocket area. And you can see we were above the golden pocket. We hadn't quite made it to the 786. And yeah, I do understand a lot of people like to short in between that golden pocket 786 area. But this range here, we saw a lot of shorts coming in. And this last little bit here was a last little bit of a short squeeze to push up. You can see that little drop right here was a short squeeze, pushed up. And for me, it didn't make sense because we were coming up to liquidity from yesterday's highs. So, but what we've seen primarily so far is shorts coming in towards the top of the range. Shorts, fresh short positions coming in. Now, we didn't take out those highs, and I was actually really surprised that we didn't take out yesterday's highs. We front ran yesterday's highs, and now we are starting to drop here a bit. With our open interest, you can see our open interest primarily over the past hour here has been decreasing because now we could start to squeeze again. You see in this, when we first started rolling over, right in this area here, it was fresh shorts coming in, short positions coming in here. And, you know, it was starting to roll over. Everyone's hyper bearish, so they're going to short right away. Well, now we're starting to see another short squeeze. Let me show you guys that right now. We're pushing up right now over the past hour, 2 hours. Primarily, our open interest is dropping. So that means, and our CVD is rising. So market buys are coming in right now over the past couple of hours, but it's not new longers. It is the shorts that we're shorting in this general area that are starting to get stopped out. And we could start to squeeze up again here, guys. Squeeze up again. And if we do squeeze up again here locally, we can pull our golden pocket locally from the highs that we made earlier today to the lows that we just made a couple hours ago. Between this golden pocket and this 786, we might see a bit of a rejection, but it's likely to me that we're going to come up and take out yesterday's highs and potentially come up to our weekly level around 90,400. Okay, let me check the chat here. Yeah, guys, please hit the like button. If you get any sort of insight into the market from this live stream, please hit the like button for me. Please subscribe to the channel and share this video with anyone you might think finds it interesting. I'm in a swing long on near AVAX Chainlink. I hope they all pump from here. Well, Mr. Moon, the thing is, if Bitcoin is going to continue to dump, and if the total market cap, by the way, I want to go into this total market cap because we did reclaim some key support levels. But if we are going to lose this pitchfork bottom and the total market cap really starts to dump, I think the alts could really see a bit of a move to the downside. So yeah, if you're in longs, that's good. And I do think it's getting close to the time where swing longs are going to be really juicy looking. But if our overall downtrend, remember the higher time frames on Bitcoin, on total market cap, on all of these, we are in a bearish trend, making lower lows and lower highs. You have your high, low, lower high, lower low, lower high, lower low, lower high. Are we about to continue and make a lower low here? You know, we are ranging, and within this total market cap, we're still holding on to the bottom of the pitchfork. Yesterday, closing the daily candle below the pitchfork was bearish, but today instantly reclaiming it with a bullish engulfing candle. So far, we are seeing a bullish engulfing candle for the day. Means that we might be able to make another decent size move up and actually hit that golden pocket in confluence with your pitchfork band. So let's see how this reacts. But that means that for the next week or two, we could get a little bit of a pump on some of the altcoins. But I'm not looking at this pump as a swing long opportunity quite yet. I would want to see Bitcoin at least take out the 80.5K lows. And really, the overall target for this bearish impulse to the downside is to take out your 74.5K lows, is to take out these lows here. Because remember, guys, we've talked about this a lot on the stream. We're looking for, and let me turn off these weekly levels to clean this chart up. We're looking for that bigger flat correction to come in here. And the target of your C wave, which is an impulse to the downside, is to take out the lows of the A wave. So A, B flat, C. coming down and taking out those lows at 74.5K. Overall, we have not seen any true signs of strength to say swing longs should be prioritized yet. I do think soon we should be looking at swing longs. But in this C wave down so far, this is absolutely classified right now as an impulse to the downside. We had increasing volume on the move down, especially in our wave 3 that dropped from 107.5K to 80.5K. You can see massive spikes in volume on that drop to the downside, making it more likely to be an impulsive wave 3 to the downside that is not complete yet. And you can see here after, let me get rid of these, after that third wave ended within this range that we're seeing right now, this range over the past month, you can see volume is decreasing overall on this dead cat bounce to the upside. So making this more likely to be a corrective structure based off of volume, but also based off Elliott waves, Elliott wave theory. We have two types of price action. We have impulsive price action that happens in a series of 5 waves and corrective price action that happens in a series of 3 wave moves. And within this first move up, you see a very clear 3 wave move to the upside. And now we could be looking at a 3 wave move to the downside, followed by another 3 wave move to the upside. And sure, could we come take out the range highs of this little range once more? Yes, we could. But overall, this entire structure from 80.5K looks corrective. There is not any impulsive price action within here to let us classify this as the start of a major swing long position. So just be careful with that, because if Bitcoin is going to roll over, we know the altcoins are going to roll over as well. And we know that it could get ugly. If you're looking for longs, which I am, by the way, guys, just because I'm overall macro bearish until we take out some lows, doesn't mean that I'm not looking for swing longs or playing swing long positions. On Tuesday's live stream, we caught a long position on Solana. We caught a long position on Turbo. And still looking for long positions. If we come down to 83,600 to 83,800, I will be looking for some long positions. But on these bounces that we see, I am looking for the resistances to look to flip short to continue the overall downtrend. Let's get the likes up to 20. Yeah, please, guys, hit that like button. Let's see how many people. Okay, we got 84 people in the chat. Awesome, guys. 84 people watching the stream. Thank you all so much for being here. Quiles 1100, welcome in, man. It's good to see you as well. Adam Hart, welcome in. And Adam, let me know if I answered your question on the open interest there. Let me know if that was helpful or not. AXSCB, welcome in, man. Thank you for being here. Guys, sorry about that glitch at the beginning of the stream, but I'm glad you guys are here. We're here on a Friday, just looking at Bitcoin, chilling, hanging out. There's not a lot to update on because we're still overall within a range. We're within a bigger range, which is this corrective range here. But even over the last couple of days since Monday, so for this entire week, we've kind of been in this sideways range here. And for me, overall, that rejection from 94.6K, this does look like impulsive structure to the downside. Now, could we say that this impulsive structure was done here? Maybe this is a wave 1 here. So within your wave 1, you have a 1, 2, 3, 4, 5, a wave 2 here, and then a 1, 2 flat here, 3, 4, 5, 3 wave corrective move in a 4. And then the only problem here is that's a 3 wave move down in a 5. And you can't see through, you cannot, if you're seeing an impulse to the downside, your 1, 3, and 5s have to be 5 wave impulsive structures. Your wave 2 and your wave 4 is a corrective structure. So there is some problems with counting this as an impulse. What I would say is we don't have to be clear on the Elliott waves. We can look at market structure. Market structure is bearish, making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. We did have an SFP here, but afterwards we did make another lower low yesterday. And even if we come up and see a sideways range or some sort of flat correction within this area, a complex flat correction within this area, which I described earlier is possible, even coming up to take out your 90.4K highs, coming up to take out last weekend's highs would be really nice, actually. I am looking and prioritizing shorts at these resistances to continue the price action to the downside. Okay, let me check this. It was a trade some of us took in Telegram. We longed 117.7. Okay, 117.7. You guys took a long from there. Oh, nice. That's a real nice trade there. So maybe that back test after making the initial low, you made your low into the bottom of the channel on this back test of the golden pocket area. You can pull that little golden pocket from the lows to that little imbalance vector candle there. Let's move that over. Yeah, golden pocket 786 area was tapped. And that's a nice trade there. And even locally, guys, look at Solana locally from the lows from yesterday. Wave 1, wave 2, wave 3, wave 4. So it's likely we come out and make one more high, potentially taking out yesterday's highs. In my light, it looks more probable that very, very locally, we are going to make some new highs for the day. And if you're in that long trade, I would stay in that long trade because we could even come up to 135 to take out some bigger highs, or even, you know what it was, this 133, 134-ish area. Okay. Looking to short 129.5 with real Batman if we get confirmations. 129.5. Okay, yeah, that's that SFP here. Okay, yeah, I mean, that is a good level to be looking at. And if we pull our golden pocket here from Wednesday's highs to yesterday's lows. All right, I guess so. We saw the small rejection from this golden pocket already. I would be looking, 130 could be an area. Let's look for naked daily points of controls within here. Do we see any naked daily points of controls? All right, let's change this to daily. Okay, nothing above us at 129.5. Yeah, maybe are you looking at that daily level there? So at 129.13, at least on Coinbase's chart, we do have that fresh daily level there. And seeing that liquidity grab into that daily level around 129, that is a decent level to be looking at. We can also pull our golden pocket from the highs of Monday, this week's highs, down to the lows that we made yesterday. And you can see that golden pocket's going to be right there as well. And that golden pocket is a fresh golden pocket because we are pulling it from yesterday's low. So I would say that area is a nice TP zone. You have a liquidity grab into a daily and a golden pocket right in this area. Now, if you're going to take that, I would be looking to see if we're developing some bull divs as we're coming up to that area. And that actually very well could be the end of this 1, 2, 3, 4, 5. And then you might get a retrace to the golden pocket before continuing to push up again. So I would stay in the long, but maybe take some profit here and then look to compound it when you get down to that golden pocket and see a true breakout of the channel, because this could be a fake out of the channel into resistance. You fall back in, you fall to your golden pocket, wherever that's going to be, and then you might see a true breakout of the channel over the weekend. All right. That was a good long. It made me close my short. Okay, cool. Decrypto, welcome in. And Dr. Rex, welcome in, guys. Thank you for being here. City of Diamonds, awesome, man. And Samuel S44, thank you for being here, and thank you for modding. Down and up and down. How are you guys? I know, man. Samuel, it's been just a very confusing time for Bitcoin. Bitcoin seems confused right now, right? I mean, overall on the higher time frames, it doesn't. But even within this push down from 94.6, we're getting a lot of aggressive drops followed by some pretty nice spikes up, aggressive drop, spike up, aggressive drop, spike up. It's just been, but overall, we're still in bearish market structure, making lower lows and lower highs. So just be aware that market structure is king, guys. Market structure is always going to show you what your priority should be. And until you can break market structure and see a sign of strength, then you can change your bias. Now, locally on the day, yes, we do have bullish market structure on the day, but on higher time frames. So you can be bullish for scalp longs knowing that market structure is bullish on intraday timeframes. But overall, on the more macro timeframes, you should be looking for shorts to take down to new lows with the bearish market structure. And that's why market structure is really, really key to look at. Mind Tapestry, welcome in. I'm doing good, Mind Tapestry. I'm excited for the weekend. I've got some fun, exciting stuff planned for the weekend. And I'm just happy to be here with all you guys. We are I think we're gonna get some really good trade opportunities in the next, couple of months here. And man, I'll tell you what, guys, if we do get down to 70K, like I am gonna be looking for swing longs from 70K, and I know that's still a long ways away right now. But if we go to the Bybit USD chart, this is my larger chart that I have the multi-cycle pitchfork on, pulled from the COVID lows, and you can see in this pitchfork, this range for almost all of 2025 has been really nice range to trade. Coming down up to key resistances has been really nice, and coming down to key support levels has been really nice. But I do think with the bear divs that we're seeing on high time frames, we could finally see a break of this range to the downside if a bear market is about to start. But remember, in our super cycle theory that we could see coming down to 70K, and I think this is actually possible, if not probable, guys, with how overall fundamentally bullish Bitcoin is. But we saw with most of the bull market, our 5-wave weekly impulse here, from the lows at 15.5K all the way up to 109K there. And then we broke market structure bearishly on the weekly by taking out this weekly range low. It was a distribution range. Remember, as that range was forming, bear divs confirmed money flow draining out as the range was forming. It was more likely to be distribution, and we did end up distributing down to 74K, which was a very, very, very key support of a bullish pitchfork in this area. Now, after doing that, we were able to rise up to make new all-time highs. We came up to the midline of our multi-cycle pitchfork, and we saw that distribution range again up in this area. Tap 1, tap 2, tap 3. Bearish divergences confirmed on the chart. Money flow draining out as that range was forming. Another distribution range in the making. Well, what happened? We distributed down, started dropping quite aggressively, over 25%, over 30% really. And now we could be looking at, okay, this C wave here, the target of that C wave is to take out your A wave lows. There is a scenario, though, in a running flat where you do not take out those lows. That is called the running flat correction. It's much more rare than seeing the regular flat correction in here. But we'll see. We're coming up to some major pitchfork band of the multi-cycle pitchfork, and just like this pitchfork here, guys, where the top of the pitchfork highly respected, the upper band highly respected, the bigger pitchfork we're seeing as well. We rejected from the midline, and we're so close to this pitchfork band here, that I do think we could at least come down to make some new lows below 80.5K. But maybe we're going to bounce before, 78K, 78.3 to 77.3 is a decent support level that we have down here. A fresh weekly level, a fresh naked weekly point of control, and a fresh naked daily point of control. This could be the low. Who knows? We don't know. As traders, we don't know what's going to happen, but we mark out the levels, and we just, as more data develops on the charts, we play whatever happens. Okay, let's go. Hourly chart. I'm just looking. I mean, it's probably going to be a boring, slow range over the weekend, at least on Saturdays, like we usually see. But I'm liking us coming up a little bit higher here. I want to check some of the lower time frames. Let's go to the 15-minute chart here. Yeah, be aware, guys, though, because we are starting to develop some bear divs on the chart. You can see here we have 1, 2, 3 higher highs in the price action, 1, 2, 3 lower highs in the momentum waves. So confirmed bear divs. NAMI has a very slight confirmed money flow divs. That was a horrible line, but very, very slight confirmed money flow divs here on the chart. And if we do make one more high and make another, take that liquidity and make another drive of bear div here, liquidity grab with confirmed bear divs, we could see that dump continue over the weekend. But I would like to make one more high. locally. Okay, awesome, Adam Hartz. I'm glad I answered that for you. And Mind Tapestry, thank you so much for that comment. I plan to have an amazing Christmas. I got some family coming in. It's gonna be awesome. It's gonna be really fun. For me, it's about spending time with family. You know, I of course we do gifts as well and stuff like that. But for me, it's really about family and maybe a little bit of traveling stuff like that. French Toaster, welcome in. He said points of control. He is now my favorite crypto streamer. Yeah, points of control. Well, points of control, volume levels. For me, I've been talking about this on my channel for really since my channel's inception. But the two most important things to pay attention to in the markets is number one, first and foremost, liquidity, because we know liquidity moves markets. So where there's key liquidity levels, key highs, key lows, this is a key liquidity level within this range. Liquidity is always going to be a key driver. We know that money actually flowing in and out of an asset is what moves the price action. But the second most important thing is volume levels. And the point of control is the most important volume level of a range that you're looking at. It is the fair value, or where the highest amount of volume is traded. So points of controls are very important, especially naked points of controls, like a naked daily or naked weekly point of control. And then, of course, your high volume nodes, like your value area low and your value area high, are very important. Because if you're in a range, for instance, this sideways range right here, guys, we can pull that volume profile, measuring the important volume nodes within that structure, within this corrective structure. And we know that when you come up towards the value area high, the asset for that time frame is considered overvalued, and you can expect some sort of a sell-off. But also when it comes down to the value area low, it's starting to become undervalued, and you can expect maybe some buyers to step in here, especially like those day traders, intraday scalpers and stuff like that. So to me, volume levels are quite amazing. And points of control, especially naked points of controls, we know that the market likes to correct imbalances in the market. And if you have a naked daily point of control, in some ways that's sort of like an imbalance that's getting tested so that the overall trend can continue. Jesus Save 77, thank you for being here. Welcome in, man. Hot Tamale, welcome in as well. I hope you guys are having a good day today. Your XRP setup played out nicely as well. Awesome, man. Yeah, I haven't checked XRP today. Let me check that real quick. I mean, oh yeah, that SFP of 177, guys, in yesterday's video, we were coming down to it literally right as I was making the video. We did have some bull divs on the chart. You can see lower lows in the price action, higher lows in the momentum waves. Money flow started coming up before we got down to that SFP. It was a very, very shallow SFP, but we did tap that level of 177, and that was the lows of Coinbase's October 10th crash. We are pushing up pretty nicely from that. That already would have been classified for me as a nice scalp long opportunity, where you got a nice 3-4% move off of that. Let's see here. 8% move. Wow. Okay. And if we could come up to the midline at 198, and coming up to that midline to grab that liquidity, once again, guys, liquidity grab right into the midline before we continue to drop here. But this was a very big liquidity level as well. And to come down and see a nice bounce from that, like, this here has been parabolic downside for the past couple of weeks. We could start squeezing this very aggressively. And I would say if we break above that midline and do not SFP that, and we break above, flip it to support locally, we could squeeze up all the way up to 230, 233, 236 quite quickly here. And I personally, I would love to see that. So if you're in that long trade, Jesus Save 77, I would be holding it open, not financial advice, just giving you my opinion on what I would do with this, is I would be holding it open, looking at if you are going to reject from key liquidity levels, like for instance, if you're going to reject from yesterday's highs, okay, maybe take some out. If you're going to reject from 198, take some out, but you could leave or take some profit looking to compound if you make a higher low. But on the way down, the thing with XRP is we've been in this downtrend, but we finally came down to take that liquidity. From here, we could get a big move up. I don't like how shallow this was. We literally just barely tapped it, and now we're going. Bull divs are on the chart. Let me go to the 4-hour. Let's see how the 4-hour looks. Yeah, I mean, nice bull divs. Like, check this out. A very good liquidity grab. Lower lows in the price action, higher lows in the momentum waves. NAMI has multiple drives, money flow curving to the upside, about to cross over into the green. Market Cipher B, the money flow still doesn't look the best, but this was a really good setup because with a swing failure pattern, you take it whether or not you have the bull divs. It's about wicking the level, then rising above it. But with combined bull divs on the chart, that's going to give you a really nice probability for at least some sort of scalp long opportunity or some sort of profit where you can make a scalp long. Okay, how did you draw your soul channel, Solana? Okay, so on Solana, if you come in here, let's nope, not that one, that one. Okay, so on Solana here, let me just clean this up a little bit. We're coming up to that 129 resistance. Remember, 129 is going to be a local resistance, but let me just delete this channel real quick. And you're going to take your parallel channel tool. You're going to go from the highs at 144.9. You're going to go down to the lower high of this imbalance candle. You could really choose either one of these, but that's your second click. And then your first low after your rejection from the POC, that first low, that is where you click it. And now we're in this nice descending channel. This is our trend that we've been in for the past couple of weeks, or at least, yeah, a couple of weeks now, since December 9th. We've been grinding down. And the thing with crypto is there's a lot of bots, algo bots that trade within crypto. So channels are very, very popular, trading within these channels. And, you know, before I started my own YouTube channel, I was in Jason Casper's Discord. I still am in Jason Casper's Discord. Oh, guys, give me 1 second. I got to turn off this alarm. Okay, sorry about that, guys. Channels I've successfully used channels for, you know, 6+ years here, where we can get the trend, because remember, the trend is your friend until the end. So when you find a channel, you can trade that trend. And look, we came down to the bottom of the channel, bounced directly from the bottom of the channel. Now we're coming up to the top of the channel, and to see fake outs sometimes is absolutely acceptable, because people that are looking at simple trend lines, you know, a channel is just a simple trend line in some ways. You'll see fake outs to get people to long the top. They long the breakout, and then it just dumps on them. They get trapped underwater. That's how market makers kind of trap people. But if you're aware of the trap that market makers use on retail, you could say, hey, I'm not going to long a breakout. Rather, I'm going to long the bottom, the touch of the bottom. I'm going to be taking some TP here, but I'll leave some open in case we get the breakout. So that's the way I pulled that channel right there. High, high, low. All right. Yeah, Hot Tamale, all is well, and hope all is well with all of you guys as well. Merry Christmas to all of you guys. I hope you do get to spend some time off of work, or if, you know, whatever you're doing, if you are a trader, take some time away from the charts. Spend some time with family, enjoy the outdoors, enjoy life. It is important to have balance in life, guys. Chad P, welcome in, man. Indy Rupali, Ruprai. Sorry, I do not mean to butcher your name. How do we add pitchforks correctly? Okay, so pitchforks, another thing we can look at is pitchforks. Pitchforks and channels are my bread and butter. I've used pitchforks and channels. I've developed my own strategy using pitchforks and channels. But let's just look at an asset. Let's go to let's see. I'll go to one that I usually don't look at. We can go Secret Network. I don't know if that's going to be a good one, but we'll go on to the daily chart here. Let's check this out. So once again, a pitchfork is just a trend. You're measuring the trend, the strength of a trend in a bearish trend or a bullish trend. And you're looking at key levels within that trend. So you can see here, we had a pretty aggressive downtrend. Actually, this whole thing looks pretty aggressive, but nice 3-wave corrective move up. You changed market structure locally by breaking that high. And then we get another big downtrend. So it looks like after taking some liquidity, we could be starting a new phase of that trend. and you could pull that pitchfork from the bearish high. So you're going to be looking at key swing highs and swing lows. So you go from that high where liquidity was grabbed. You're going to go to the low of the initial move down. If I can get to it. And then you're going to bring it up to that lower high. And there's your pitchfork. And sure enough, depending on how flat the trend is. So if it's an aggressive, sharp trend, your pitchfork, first of all, go into settings. You're going to want to turn on the 0.5, the 618, and the 1. That's the way I use pitchforks. So the 0.5 is going to be the light green lines here. It's going to be your 0.5 plus and your 0.5 minus. The midline is just the midline, and then the 1 is your top and bottom, right? Those are the important levels. Now, we also know the golden ratio is found all around us within our brains, within, it's everywhere, within our psychology, within nature. So that golden ratio is the dark green line, the 618. So when you turn on the 0.5 and the 618, the 0.5 is the equilibrium. And oftentimes the equilibrium of a move will cause a reversal. And so the 618 and the 0.5, this makes your upper band. I kind of term that phrase. This is the upper band of the pitchfork. This is the lower band of the pitchfork. And then of course you have your midline, top and bottom. And oftentimes within these bands, you will get kind of ranges that form in and around these bands a lot on larger pitchforks. But you can look at our overall trend has been bearish, but you can see we're starting to flatten out, at least in this area where we draw the pitchfork from the, from this start to the last pivot point right here, we're starting to flatten out. So you're not going to, as far as your pitchfork goes, you're not going to want to use a original pitchfork, because an original pitchfork is for a very aggressive trend, like in this case, a very aggressive downtrend. But since we started flattening out here, you're going to go into your settings, and I'll show you if we were using an original pitchfork. I guess actually this still does have some respect here, but you would expect that downtrend to continue pretty aggressively. We're still within sight of it, but we're chopping sideways through the levels. But because the trend is starting to weaken and we're starting to see some selling pressure decrease here, kind of finding a floor, I would say, you can click this into settings, and a skiff pitchfork is your most sideways, or should I say your least aggressive setting there. And so if you click a skiff pitchfork, you can get the settings for a skiff. Now, I would say crypto, and especially Bitcoin, does like the modified skiff pitchforks. And so if you go to a modified, you can see that these levels, no matter what pitchfork you choose, though, these levels are highly, highly respected. Midline respected, upper band respected. Bounce from the lower band, get a lower high, you come down to the bottom, bounce from the bottom, come up to the upper band, or the lower band, reject it. You get the liquidity grab of that low. Then you make a move up to test that upper band again. You tried to break it. You can see within this range, we tried to break it a couple times, couldn't. You get a move down to the bottom, another liquidity grab. After that liquidity grab, you test the bottom of the band. Reject, you're going to go down again, and now we're starting to form a bottom here. But needless to say, pitchforks are really, really great tools. I know that Dread Mining has been using them since we discussed pitchforks. He's been using them really good in his trading. He's part of the Casper Crew community and stuff like that. So that's just a little bit into pitchforks. I hope that helps a little bit. I just meant that you didn't say point of controls or points of control. Oh, okay. Yes. JB Hulk, Smash. I get what you're saying, because a lot of people will say points of controls, or it's a point of control, right? All right. Weekly green dot on Market Cipher and lots of shorts opening. Counter rally incoming. Well, yes. So we do have a green dot on the weekly, but you are going one green dot against multiple drives of confirmed bear div. Now, historically, the green dot has given us a bit of a move to the upside. Let me go on to a cleaner chart here. And, you got your green dot on the weekly. Now, that green dot was coming in last week. We're still you have one green dot, but we have the multiple drives of bear div, 2024 all-time high, January all-time high, most current all-time highs. You have multiple drives of bear div. You have money flow draining out of the asset as the range is forming, still locally coming to the downside, draining out. Yes, you get the green dot. The green dot could give you a bit of a move up. Could we back test some keep anchored VWAPs or even that 50-week moving average at 102K, 50-week moving average up here at 102K, sure, we could. But the overall trend, I would expect it to continue. Now, this green dot might give us a decent push up. And yes, that decent push up could last a month and it could give us some really good long opportunities. But I don't think that just based off the weekly green dot, we're going to get new all-time highs. The overall market structure is more important to look at, in my opinion, and market structure is bearish. The normal Swede, welcome in, man. It's good to see you here, and much love to you as well. And you're welcome, Indy Rupari. Long in breakouts is risky business. I learned that the hard way. Yeah, AXSCB. I have done breakout trading, and I will sometimes. Like, for instance, on Solana, say we have this descending channel here, and we're gonna come up to 129. We're gonna reject, and we see this move down, maybe a 3-wave corrective move here, where volume is decreasing on the drop to the downside. And it looks like we're going to bounce from this area. I don't necessarily long the breakout. I'll long the back test of support in this area, knowing that this could be a bigger wave 1, wave 2, wave 3, 4, 5, looking at a potential trend shift, market structure change, So, but it's much better to long the actual support down below, especially if you have bull divs on the chart. You have bull divs on the chart as you're coming down to the low of that trend, that channel. Like, that's a much better entry here. Or where Ja Fuel did, where he got the low, he got a little bit of a break up, and then he back tested the local golden pocket and long that local golden pocket. That way you can manage your risk very successfully. If we're longing that back test that Ja Fuel was talking about with Real Batman in the Telegram, you got your low here into the bottom of the picture, or into the bottom of the channel. You saw the bull divs confirmed on the chart on multiple time frames. So now you could pull your Fibonacci from that low to the high that was made. And this high, this push up was just to recover this imbalance in the market. You can see this sort of imbalance candle or fair value gap in here. We filled the fair value gap. We get a bit of a move down. Now you could look at your higher low golden pocket, 786 area. If you long this, you have a calculated stop loss, right? Because your idea is that you're about to change market structure locally. Your stop is going to go below that low. And then you could just be targeting, for me, the first test, I would have been targeting the back test of the value area low. That's a 7.5 risk to reward ratio on that trade there. Now you've broken above the value area low, back tested it, and it looks like we want to continue higher. Your TP2 could be at your next resistance, that daily level in that golden pocket. 13-to-1 risk reward ratio. And guys, a lot of people think you have to catch the absolute bottom of a mega dump or the absolute top of a pump to make money. You don't. It's about your risk reward ratio and how tight your stop loss is. Because remember, you're calculating your position size based off this number here. So you could have longed the absolute bottom of the channel, but you say, okay, wait, my invalidation, I'm going to put my invalidation below the anchored VWAP there and give it a little bit of breathing room. Well, you have a 1.5% stop loss. Now, the one that we showed, the example we showed right before here, you only have a 0.75% stop loss. So you can actually, on this move up, even though you're longing it from a higher low, you can make more money on this trade because you have confirmation if your idea is wrong, you get out sooner than this trade here, where you could say, hey, my invalidation is losing that anchored VWAP. So it doesn't matter about the move. It matters about your entry and your stop loss. The tighter you can get that stop loss, the bigger your position size. And that's going to allow you to make more profit. Turbo was good long last night. Let's check Turbo real quick, John Shanks. And John, welcome in. Turbo. Wow, so we did wick past that golden pocket and that liquidity. It wasn't per se a liquidity grab, I would say. So did you long? Let's see. This was probably, you did fill a fair value gap in here. Almost filled it. and you're bouncing. But yeah, I would say even upon the reclaim of the golden pocket, you could have longed that. Now you would have had to adjust your stop loss quite a bit based off of that big wick past the golden pocket there. But yeah, look at that long. Now I will say this, look at this. You're coming up and you're back testing the value area low of this range, and this range is the range that we've seen since the October 10th crash. Well, you're rejecting that value area low overall. You tried to break inside of it, you couldn't, and you lost it. So just be aware. And the thing that is a bit scary here is, once again, this being that flat correction, A wave, B flat, you took out the highs, you took the liquidity of the highs. Now our C wave coming down to take out the liquidity of the lows. And on that C wave, you can actually come down even to the 1.382. So if we pull that Fibonacci from the lows of wave B to the highs of wave B, and we look at our expansion levels, and let me turn on that 1.236. So let me get rid of some of these. And we'll just mark out, let's see, 1.236, and then we'll do this. 382. Wow, actually, we could come a lot lower on that. Because sometimes in an expanded flat, you can come down to these levels here. But yeah, we didn't even come down that far. That was a bit tricky though, because you didn't see a clean swing failure pattern of this low. But reclaiming that low, the second you reclaim it, you could enter long. And then I would probably take profit when you took this liquidity here into the value area low. You have this liquidity here, this internal liquidity into the value area low, but this looks like a squeeze to me. So be careful, because with a short squeeze, if you don't have new money stepping in, you could just fall right back down. And also, if we're looking at this move here, let's zoom in a bit onto the 30-minute chart. 1, 2, 3. This is all your 3. So if we're looking at this as a possible impulse, you got a little wave 1 here, this 3-wave corrective move, and a 2. All of this would be your 3rd wave. Now your 4th wave, if it retraces to the golden pocket, it's going to invalidate it. And this is going to be classified as a 3-wave move. You're likely to come back down, take out the lows. So let's pull that golden pocket from the lows of 3 to the highs of 3. We've already hit the golden pocket. Let me make sure that this is, yeah, we've already hit that golden pocket there. So in some ways that has invalidated, not in some ways, it, at least for this structure here, we now have to classify this as a correct, more likely to be a corrective structure that is finished, rather than this being a 1, 2, 3, 4, 5. But here's the thing. You don't even have to look at LE waves. Trade the levels, right? So you can pull your volume profile of this bigger range. You could also just pull a volume profile. Let me hide this bigger volume profile. We can pull a volume profile of this sideways corrective range that we've been seeing since the end of November. Okay, look at where you rejected there. Bearish backtest of the value area low. Perfect rejection from there. Moving down, let's look at our volume. On the move down, you have a pretty high spike in volume. Now, in corrective moves, your C wave within that corrective move often ends on a high amount in volume. So we ended with a high amount of volume, and then we dumped with a high amount of volume. So I would say be careful with this. Also, as far as trading the actual price action, you had a perfect rejection from the value area low on a bearish backtest. That is not good to see overall. You lost your upper range, came up, bearish backtest, rejected. That was probably around your golden pocket as well. Let's pull this channel, this descending channel that we were in. And it's probably going to be golden pocket 786. Yeah, 786 golden pocket area. So just be aware. Okay, secret is greater than S escrow or escrow is greater than second. Yeah, a hot tamale. I can't answer that question because I don't know enough about the two coins to answer that for you. Can we check turbo? Yeah, we're look at turbo right now. So what I would let's redo some of the TA here. So, but just be aware you did reject from that bearish backtest of the value area low of this range that we've been in for about a month now. You know, a little bit. November 27th. So I'm going to get rid of this green box and we're going to get rid of this liquidity level. Daily's also been tapped. Yeah, your daily's been tapped. There we go. Remember, one thing that we did talk about is the bearish scenario here for Turbo is overall, this move up looks like a 3-wave corrective move. And unfortunately, because of that, you might see the continuation here. But that bigger range is what I would be looking at. This sideways range in here, it looks like we could be forming a bottom. So yeah, if you come down, you know, we do have that support below us, a naked daily point of control, 001537. And even at these lows, that weekly down there, did we already take that out? Let me check that. No, that's a fresh weekly down there, but we want to move this. Okay, in a bullish scenario, let's say you're bullish on this. We did see towards this since the October 10th dump. We have the lower lows in the price action. You know, pretty nice liquidity grab here or liquidity trail that formed here. Now you've taken out most of that liquidity trail with this move up here. But you can see now we are developing, actually there was no bull divs there. But now from this low, if we make another lower low, we could develop some nice bull divs on the chart, but we need to come down and take out this low. I would say if it was going to be a major bottom, you would have at least some daily bull divs. But because we don't have daily bull divs, and to get daily bull divs, you would have to break those lows. Overall, I would remain in a bearish overall bias. But I would be trading this range because this could kind of be a bottoming range that is forming here. And it's more likely that this is maybe a tap 1 of an accumulation. We're going to come down again, see a tap 2 before seeing another tap 3 and creating an overall bottoming reversal pattern here, where then this thing could break out and come test, you know, this key resistance above us. That will take time to play out because this is a daily chart. Let me just look here real quick at our fixed range volume profile. Okay, that golden pocket is no longer in perfect confluence with that POC, but it's close. And I would say this is still a major area. Of resistance there. And that's more than a 30% drop. So what we're going to do is let me put on both the golden pocket and the 786. And you do have to put this based off log scale. That's the proper way to use that. Now, if you don't base it off log scale, you see that's nice confluence with that POC, but it's not necessarily the proper thing to do because this is more than a 30% drop to the downside. You do have a naked weekly point of control right next to this 786. And I would say because this liquidity is above the point of control, you might move up to the 786 if you see a bigger move up. First order of business, I would want to reclaim this value area low of the bigger range. And if we look at pulling a golden pocket from the highs that we made yesterday, or today, excuse me, to the lows, and we'll turn that off log scale because this is a smaller move. Yeah, I would be looking at this. You know, you have this imbalance in here or fair value gap. You would fill that fair value gap right into this. This would be that. And if we look at that fair value gap, you'll see fair value gap would be filled right into the golden pocket. Okay, CJ, welcome in, man. It's good to see you in here as well. I think we will dump to 78K first before going back to 100K. Yeah, to me, that's the highest likelihood as well. To me, it's okay. Let's go back and check Bitcoin here. Overall, guys, we are still, we have to, because what happens is we'll pump intraday, you know, and this is a decent pump. If you got a long off this, I mean, good for you. That, you know, but we get small pumps like this, or we get small pumps like this, you know, pumps like this, and people get, you know, bull markets back on. We're going to new all-time highs. The overall premise is still a big downtrend, you know. And if remember, you filter from high time frame to low time frame, because on the low time frame, there's going to be ebbs and flows all over the place. It's just traders trading the market, bots trading the market, things like that. Money just flowing in and out of the asset. But the overall premise on this thing is that you are still in an aggressive downtrend. You've lost a key trend. This trend line was the trend, the support for the entire bull market. And I've shown you guys this Fibonacci channel many times, so I'm not going to go into it really big here. It was also around your anchored VWAP from a key low, where when you break it and you bearishly backtest and reject, you can expect to take out the lows. We have rejected 3 times on the bearish backtest of the anchored VWAP and channel area. So it's likely, sure, we could bounce here, come up maybe, and then come down. But the overall premise is that we are going to come down to take out 80.5. It's just, are we going to see small ebbs and flows within here first? You know, come up, take out those weekend highs from last weekend before coming down. Or are we going to continue grinding within this small range to come down to 83.6 first, bounce from there, then come up, take out 90.6 out, and then come down? It could, you know, we don't necessarily know exactly what's going to happen, but we know the overall bias should be lower. So now we look at our key levels, key confluences of resistance, key confluences of support, and you trade whatever comes if you have confirmation. Yeah, Machi HK, it's so good to see you in here as well, man. I hope you've been doing good. I know you've been bearish. I'm still bearish as well, Machi HK. Overall, still bearish as well. Glasshopper, thank you for that kind comment, man. I'm glad that they're helpful for you guys. And ZC Beaming, what's up, man? Happy holidays to you as well. Let's check out Ethereum here. Ethereum is starting to break out of that ascending or descending channel. So see, here's a kind of a good example of that. Ethereum was in this very nice descending channel. We broke out of it, back tested. Now we held the VWAP, but because the VWAP is holding locally, it's likely that we make new highs above the highs from earlier today. So I would say you have some liquidity into a POC that we front ran here at 30.28. So I would say it's likely that we're going to come take out this liquidity, because we did bounce intraday from this VWAP here. It's likely that this uptrend continues. Also, from the lows from yesterday, this could be a nice little impulse here, a nice little intraday impulse. Wave 1, wave 2. Reclaim the midline of your channel. Wave 3 breaks out of the channel or even continues up to this point. Wave 4 holds the VWAP. Wave 5 to come up to grab liquidity. Would you long 74K? I would if I see the confirmed swing failure pattern, and on that one, it's a high time frame liquidity level. So in that scenario, yes, absolutely, I would long it. I would want to see the pierce below it and the reclaim above it. And what I'd be looking at is a SFP, and not just like a 15-minute SFP, but like even like a 4-hour SFP. So say we come down to that $74,500 low, 74.4, let's say, and we come down. Didn't mean to do that. Come down below, maybe bounce from here, then come down below, grab that liquidity. I would want to see the pierce below it. Then as soon as we reclaimed it, I would look for the long and I would set my stop below wherever that wick was. And I would probably target, because it depends on how we get down there. But remember, we're looking for our overall impulse from the all-time high to take out those lows. So after an impulse finishes, and this is a big daily impulse down, you're looking for a corrective move, and that corrective move oftentimes comes up to the golden pocket. So we could pull a golden pocket from the all-time high all the way down to wherever that wick low would be, and you could be looking at your log golden pocket coming up to 102K, 204K. Now, remember, you guys, your 50-week moving average, which is historically 100% hit rate, acted as resistance after you lose it. If we do swing failure pattern and then see a 3-wave move up to that golden pocket, anchored VWAP, 50-week moving average, high time frame bearish backtest, that could be the bear market starting. We don't know. I mean, that's a lot. That's projecting quite a ways into the future. But we can keep that as a macro scenario in our head. But first, we're just kind of working on all this, And honestly, like, I know a lot of you guys like to do scalp trading. NAMI is so good for scalp trading, by the way. I mean, it's much quicker than Market Cipher being confirming. But I would just be playing this little range in here. I mean, yeah, I'd say this sideways range here. You could even pull it a little bit farther. You're taking swings right now. You're taking swing longs right now. I mean, yeah, I don't like how this initial push up from 80.5K was a 3-wave corrective move. If the 80.5K was going to be a macro low, you'd want to see some nice impulsive price action out of here. But that looks like a nice, clean 3-wave move. And nothing in this really looks like motive wave structure on high time frames. Yes, within small time frames, you're going to get an impulse within here. You're going to get an impulse within here. But overall, in the higher time frames, nothing looks like swing long opportunity yet for me. This looks far more corrective, like a corrective range, with volume decreasing as the range is forming. You're short from 102. I'll stop at 78K. I'll long probably 74, 78 to 100. Yeah, I mean, I would say if you're a swing trader, 78 to 77K is going to be a really good support level, because you would be taking out those 80.5K lows. And I know some people that are counting this move down. All of this is a wave 1. This is your wave 2. This is your wave 3. This is your wave 4. This could be your wave 5. This could end this impulse. And so 78.3. I also heard, one of the ETF managers, I can't remember which one it was, but he thinks that the bottom is going to be at around 78K. He's like, that's going to be the bottom. Once it hits 78K, maybe, he said, maybe we drop to the mid 70s, but he is going to start heavily buying around 78K. And yeah, maybe it is. And then, you know what? Say that's your 5-wave impulse ending, 3-wave corrective move up to 102, 105, maybe even 107 or so. And then you could even just range in here for a bit, kind of like 2024, where we freaking ranged for 8 months. This could kind of be a bottoming range that accumulation occurs, and then yeah, so that's what I'd say. Now, guys, total market cap, we're still at the support level. Another thing with total market cap, I don't like how we did reject the bearish backtest of the value area low. And this value area low is the entire price action of 2025. This big sideways range in here. And with this sideways range, when you lose a value area low, yes, you're going to bounce from very key support, and then you're going to backtest that value area low. If you reject, you can just expect to make new lows below the initial low break of that. If you get back inside of it, you could say, wow, that was a fake out. This was a fake out, and get everyone to sell the fear at the bottom. And then this thing could really start to squeeze up and really start to squeeze up to new all-time high or new highs of the range. But so far, we're not reclaiming it. We are rejecting it. And this, man, if this doesn't hold, it could get bloody quickly. I will say this. I've shown you guys this many times. Let me go to the Bitcoin chart real quick. The 3 taps on these higher time frame support and resistance structures like pitchforks and channels. Tap 1, tap 2, tap 3, and then rejected, right? At the total market cap, we are at the bottom of a very key pitchfork. Let me zoom out to the daily. And let me hide this range for a second. You know, we rejected the top of the pitchfork, moved all the way down, front and the bottom, which was a little bit concerning for me. But you can see up here, what was it again? This was a distribution range up here. Tap 1, tap 2, tap 3, boom. Now we're at the bottom. Tap 1, tap 2, tap 3. Are we about to? You know, that's a bullish scenario that could happen. I don't like how there's no bull divs down here. You would want to see some nice bull divs, and we're not seeing them. In order to see them, we would have to take out that low. Also, if we go to like the 3-day chart, money flow just crossing into the red, hidden bear div printed on the bearish backtest of that value area low. Value area low right here, bearish backtest confirmed, or a hidden bear div, excuse me. Confirmed. And a hidden bear div is a continuation pattern. Our trend has been a downtrend. So it's likely that on that bearish backtest, you printed a hidden bear div. The trend is likely to continue to take out that low. So yes, could we see it? You know, we don't know. Could we see it? Yeah, but I would just be wary until we start to reclaim some levels. Now that means you're not going to catch the very bottom of the move. You know, as traders, sometimes we be conservative and wait for confirmation for those swing trades rather than, you know, risking it and having a big loss. You could even look at market structure locally within this guy, you know, like market structure locally within here is still overall a downtrend. I mean, we did break the highs. Unlike Bitcoin, we did break yesterday's highs. We SFP'd yesterday's highs. That is somewhat bullish because that could be your first break in market structure. So maybe you do this and then you get a higher low before making a higher high and start to break this overall downtrend and start to make a new trend. What type of trader am I? I mean, I do scalps. Sometimes I do day trades. Most of the time, my trades are day trades. Like they could last a week or 2 weeks, or maybe 3 weeks in the trade. But I also do like to do swing trades for sure. And I'll like on my swing trades, I'm generally sometimes buying spot as well. You longed 118 on Sol. Yeah, that's good, man. Sol 118. So okay, you were right around Jaffiel. Jaffiel longed, I think he said 117.6. So this back tested the golden pocket 786 area. That's a nice little long there. I remember we have that resistance of a daily level and a golden pocket around 129. If you pull that Fibonacci from and the reason why this high is important as well. Let me hide this channel real quickly. And I'm going to hide our big volume profile real quickly. We're just going to look at the pitchfork. You were kind of holding you're trading kind of within your pitchfork band here. I would say it's a little bit larger of a range, but you're trading within that. You lost it, made new lows. You bearishly back tested it here, rejected, and harsh rejection. So that high is going to be important because it was a bearish back test here. And upon that rejection, you saw a nice volume of shorts coming in here. So that high is a key high that stops are going to be above that high, stop losses. But you can pull that Fibonacci from that high to the lows that we made yesterday and look at where your golden pocket's coming in at. That daily level, and it's also liquidity. So just above us could be a little nice short. Could be a PO3 in forming in the daily on Bitcoin or on Solana. I would be, guys, actually money flow looks pretty good here. We did print a hidden bear div just now, but I think we're going to make new highs locally. I think we're going to come up and take out yesterday's highs on Bitcoin. On Solana, it could be, man. It could be. And you know what? So if we're going to see that bigger bottom here, well, first of all, we're near the bottom of the pitchfork. And this pitchfork actually has been really respected as well. You see here at the top of the pitchfork. And in this area, I was warning everyone, we were just breaking above the pitchfork, but we had this big resistance up here. And this was our macro 786 Fibonacci pulled from the all-time high down to your $96 low. That was your macro 786 Fibonacci. There was also a weekly level up there. If I zoom out to the weekly, boom, you tapped into your weekly, you tapped into your 786, and the top of the box is a naked weekly point of control. We still have a fresh naked weekly point of control up there. So that's where that box of resistance came from. You can see that naked weekly at 255. There's also a daily up there as well, a daily at 256. So it was big resistance at the top of a pitchfork. We rejected the top of that pitchfork. Let me just delete this now. And we've worked our way down through the pitchfork. This was also really important here, guys. You can see I had the green box, and we did get some nice trades off of that. But that was your anchored VWAPs from the all-time high and from the $96 low, coming in convergence here. And I believe it was our golden pocket pulled from this last big daily low to the high. Or it was this one. Yeah, it was your golden pocket there. So got a nice bounce, and look at, you back tested that upper band. And then you kind of formed that sort of triangle range in here. Fake breakup of the triangle range to back test the lower part of the band, and then you dump. Lose the midline. Back tested his resistance. And now you are chopping around the lower band. But if we come down to the bottom of the pitchfork here, that could be a nice little rounded bottom, a little accumulation that forms in this area. So maybe we're going to explode up from there. We'll have to see how Bitcoin does too, because if Bitcoin is going to dump to 70K, I don't think this is going to hold for Solana. Even if it dumps to 74K, I don't think this is going to hold for Solana, and we might be coming for those lows at 96. We're still at the value area low of our larger range. You can see right at that value area low there. And we're just forming that range between the POC and the value area low. This is where a range would, if you're going to see a bottoming reversal range, this is kind of where you would want to see it. It's your more macro trend that you re-entered. So, broke above it. Now, this pitchfork's a really old pitchfork that was pulled from way towards the bottom of the bull market. You broke out of that trend, but now you're back inside of it. If you start to lose that, you're pretty much losing all of this momentum that you, or all of this. Man, you could see a big dump here. Would you go all in with $100? Wait, if you would go all in with $100, where would you put limit sell order at 90K? For Bitcoin, I would put the you have to watch yesterday's high at 89.5 because we could SFP that. I think it's likely we come take out yesterday's highs. But if we don't SFP yesterday's highs, I think we're going to come up to that weekly level and the weekend liquidity from last weekend. You can see this was a Saturday high at 96.50-ish. And then our weekly's at 90.4. So, and then, of course, you have the liquidity grab there as well. So I would be looking at initially, I would say you go all in with $100 right now, which it's not the best idea. You're trying to break out of this value area high, and you're struggling here. You can see all the wicks above it. Look at all the wicks above this value area high in here. But if you do break it, so a safer play would be, say you break it and then locally flip it to support. On that flip, you could look to put $100 in. I mean, it's not a good risk to reward trade. So if you want to be a long-term trader, you should be using a 2.5 to 1 or a 3 to 1 risk to reward ratio, right? Knowing that this is our first potential reversal area, the liquidity grab of these semi-equal highs, that would have to be at least a TP1. You would have to put your stop loss below this low for the trade to be invalidated. Or I guess if you wanted to kind of tweak this to make it work, say you break above, back test, and on that back test, you look for the long, I would be putting that stop with a little bit of breathing room below that low. And then that would make it a nice risk to reward setup, 16 to 2 right there. 16.2, I mean. But that's risky because you could just do something like this, right? Boom, reject from your kind of 786 area, and then come back down. But the two levels I'd be watching is this and this up here. How would you set up a stop loss on a short if we take yesterday's high before continuing down? Okay, great question there. Dima Jerez 9932, great question. So this is how I would take it. If we're gonna come and take out yesterday's high at 89.5, let's say 89.5. First off, you're looking for the wick to pierce above that high, come a little bit above it, because stop losses are set above this high from yesterday. All the shorts that entered, anywhere within here, specifically towards the top of that move down, your technical invalidation would be above that high, but you're gonna give it a little bit of breathing room. That's why, like on XRP, when we saw it just tap the level and then start to push up, it's not as good as if you actually wick past it a little bit, because you want to stop out those traders. Let's just say some people longed. Let's say the people longed in here yesterday. They're going to put their stop a little bit above that high, above 89.5, so you want that wick to go above enough where it stops those traders out, because a liquidity grab is essentially a stop hunt, a liquidity hunt, right? You're hunting that liquidity, then you're going to continue the trend. So you'd want to pierce above it, and then as soon as you lose, like you pierce above, you stop out those traders, and then as soon as you lose that level, short, you're entering short upon the loss of that level, right? So once you lose it, now you can enter short here, and it's going to push down. Your stop loss is going to go above that high, and you could give it a little bit of breathing room, right? A little bit of breathing room. It's going to go above that wick high, and you would be targeting, I would pull a golden pocket from the lows to wherever those highs were going to be. My TP1 would probably be this golden pocket, because this could be a 1, 2, 3, 4, 5, and then you're going to see a 3-wave corrective move to the golden pocket and then continue. So TP1 would be golden pocket. TP2 would be all the way down here. But this, just with this trade setup here, that's pretty much a 6-to-1 risk to reward ratio, right? Now, the way you're going to calculate that is by this stop loss percentage. Like, let's just give you an example here. Let me pull up my calculator. So an example here is, let's say you have a $1,000 account. Well, what's 1%? You're risking generally 1% per trade. 1 to 2%, I'd say max, right? 3% on some swing trades, but 1% of $1,000 is $10. So you're risking $10 per trade. That means if you get stopped out, you're going to lose $10. You're going to lose 1% of your portfolio. So we're going to do $10, and you're going to divide it by this number here, this stop loss percentage. But because it's a percentage, you got to move the decimal over. So you're going to do 0.00586. This is how much money you can put on the position. So that's going to be your actual position size. You can enter with $1,706. And if you get stopped out, you're only going to lose $10. Now, I know what some of you are thinking. Well, wait, you told us we only had a $1,000 account. This is where leverage comes into play, guys. This is where you could crank up your leverage to 2x or even 3x. Now you have, let's say 3x. Now you have $3,000 in your account. 1,000 of it is your own money. 2,000 you're borrowing from the exchange. And now, say you put it on 3x, you have $3,000. So now you entered the trade with $1,706 on 3x leverage. If you still get stopped out, whether that leverage is 2x, 3x, 10x, no matter what that leverage is, you're still only going to lose $10 based off of this stop loss. So you're calculating your position size. Your position size should be this. If it's over that, you're going to lose more than $10, right? But then you're risking $1 to make $5.88. And so, the way to do that would be is once it pierces above and then loses it, that's when you enter on a swing failure pattern. And my final TP2 would be all the way down here. That's a really good risk reward trade. But when you hit TP1, it's often a good practice. When you hit that TP1 here, you pull out, 25%, 50%, depends on what kind of trade you're looking at here. So for me, because I'm looking to come down to make new lows, I'd probably only pull 25% of the profits out here. And then I would move my stop loss to break even. So no matter what happens, even if it bounces from here and then continues up, I still made a small amount of money. And if I get stopped out on the rest of it, it's whatever. It sucks that you could have made more, but you're not always going to make the most amount of money that you in a trade. Sometimes you have partial wins. Sometimes you get stopped out at break even without any wins, or sometimes you take the loss, Okay. How would you set up? Okay. I just read that one. 12-hour order block underneath us for Sol. Yeah, I think, well, that 1.618 is down there as well. And for me, I'm the reclaim of this value area low is pretty nice, but if we're looking at a larger move, let's see, what was I looking at? Yeah, here from this, so this sideways range that we were in, this is like a bottoming horizontal range that we're in right here. And from the highs of the range, we took liquidity of the highs of the range. Then we saw a nice push down, and then we saw this kind of three-wave corrective move up to make a lower high. So I was looking at this structure here being a potential impulse to the downside. Now, gets really ugly to count here because of all these wicks and stuff, but wave 1, wave 2, was this a wave 3? Now, your wave 3 generally comes down to the 1.618. We did front run that a little bit, but we're still in bearish market structure here. So, and then, after hitting that, you see a wave 4 and then a wave 5 to end maybe at the bottom of the pitchfork. And then we might see a bigger move up. That's what I was looking at. I was looking at that a couple days ago. It doesn't look so nice now because of all these huge, pushes up here and this push up here, so like, but a 12-hour order block. Yeah, that's actually a really nice order block there. And the bottom of that order block is into your daily level. So that's also going to be a daily level there. So between 113.89 and 112.75, it's a nice little order block there. And that makes sense too, because look at, that's pretty much going to be in confluence with the bottom of your pitchfork, that general area. I want to short Aptos, but it's overbought like hell. I want to short Aptos, but it's overbought like hell. Well, if it's overbought, then that's actually a good time to sell, to short Aptos USD. Let's see. We rejected the golden pocket POC here, wicked a little bit above it to hit the value area high. We did see that bounce from this golden pocket, made a little bit of a move up, but it was a lower high, and now we're breaking this thing down. Yeah, this thing, wow, dude, Aptos is dying. The crazy thing is from, man, actually, I would say this. Is there USDT? I want to see if there's more history. A little bit more history. So that was the listing. I would say your honest, like, fair price range is between this area, and you're starting to break down really aggressively here. But I mean, geez, this could even be like looking like a wave 1, a wave 2. All of this is a wave 3 so far. And the Coinbase chart doesn't have this giant wick from November or October 10th. So I would be looking at the Coinbase chart, actually. It looks better. I know this chart's really messy, guys. I don't keep an object tree, so I'm not hiding all this stuff that's up, all these levels that are up here. But here's the thing, look at this. This was, like I said, that upper range in here was kind of your fair price for this thing. And well, now the value area low is shifted down aggressively, but let's pull it back to right before the breakdown, right here. Look at where the value area low was. So you were holding the value area low, kind of like Solana is now. I hope to God this doesn't happen for Solana, but you're coming down, value area low, value area low, value area low, value area low, value area low. You couldn't even break these lower highs in here. And then you break it to the downside. And this is breaking this value area low with an impulse to the downside. Whew. Scary stuff there. Wait, you're looking to short this? I would not be shorting this right now. Heck no. I mean, you're shorting the bottom of a giant move. So unless you're talking about a scalp. But even on a scalp, this thing has been aggressively downtrending right now. Look at this downtrend here being so aggressive. All of this being so aggressive. You could start to squeeze this really rapidly to the upside. Let me check this 8-hour chart. Do we see bull divs on the chart? Yeah, you have bull divs. Look at all this here. Actually, I would be looking to long this thing maybe. Look at this. Higher lows here. Bull divs confirmed. Money flow curving to the upside. Multiple drives of bull div confirmed on NAMI. About to cross over into the green here. You finally just had your first break in market structure here. So if we go look at this high, and let me go to the 4-hour chart. You're breaking this high. So you're finally seeing a bullish break in market structure on the 4-hour chart. Now, you're not going to long right now. It would be kind of dumb to long right now, but say now because you had a sign of strength. By breaking market structure bullishly, that's a sign of strength there. So you could look now for a higher low retrace at the golden pocket, and this long from this golden pocket, you could be about to reverse trend here and squeeze a lot of these shorts in here, a lot of these stop losses that are in this guy here. What I would be looking at is this last little channel down here. You can see a little descending channel here. Let's pull that channel, and I'm going to go here. Let me just check this. Yeah, that's your descending channel that you're in. You're breaking out of the channel. Let's look at our volume. Volume is spiking on the break of the channel, which is nice to see. So what I would do is I would pull a golden pocket from the highs of the channel to the lows of the channel. And this golden pocket here might be an area where you're going to reject and then come down for a higher low. So what I would do, let's check out our naked daily and naked weekly points of controls. Let's see if there's any points of controls and points of control. We have that naked weekly. I want to be accurate with this. And we have a nice naked daily at the 786. Okay, that's pretty cool. Pretty nice. Yeah. So because we have some bull divs confirmed on the chart, and I want to check the daily out real quick. Is the daily seeing any significant? Yeah, bull divs, money flow curving to the upside here. Bull divs on the daily, money flow starting to curve to the upside here. I would say this guy is more likely to see a big long soon. Is this the low, the overall low? I think this is the overall low. Besides the wick that happened on, Bybit and Binance and stuff. So you see how you're starting to find resistance here a little bit? If you pull back now, even back testing the channel, you could long that for a breakout. Even up to here. And then maybe you're going to pull back and, start to see a bit of a change in market structure. But I wouldn't even be to short this right now with the confirmed high time frame and low time frame bull divs. Man, I don't know. And you just finally had a sign of strength by breaking this market structure. Now, if you're looking at a very small scalp, you take this liquidity, right? We just took the liquidity. And I wouldn't even say it's a clean liquidity grab because this was the liquidity grab, but you made a higher low and now you're coming up again. But let's just say you are going to lose it again because you do have low time frame. This is 15-minute bear divs. Higher highs here, lower highs here, right? Once you lose that 164, you could short here. You would put your stop above that high and just maybe be targeting the back test of the channel, that's still a good scalp, a 3.4 risk reward scalp there. But you're kind of playing with fire because the overall trend could be getting bullish now. Okay, let me check this. Okay, wait. So Maddie Ghost, I hope that helps a little bit. Now, I'm not trying to poo-poo on your ideas at all or anything like that, because the downtrend is heavily short on this thing. The bearish. The downtrend is heavily bearish. So I understand why you're looking at shorts. It's just a little bit dangerous to look at shorts at the end of a giant dump. You know, at the end of a giant dump, you're finally seeing your first sign of strength here. So just be careful with that. If you are, make sure you're having your trade plan and your invalidation set ahead of time. Okay. I meant to short. Okay, normal Swede. You said, would you go all in with this $100? Where would you put your limit sell order? Limit sell. Like if you're gonna go for a short, where would I short it at? Yeah, I would short it between 90. So what I meant by that, normal Swede, is I would be shorting the SFP of 89.5 if you get the confirmed liquidity grab and dump, or I would be shorting a confirmed liquidity grab into this resistance. And I think that one's nicer. Monday's high at like 93.30-ish. What was that? 93.36. So I would be looking to short if you get the SFP of this high into this resistance, and even your weekend highs are up there. I'd be looking to short that. And then where would I put the TP at? I would pull, first and foremost, I'd pull a golden pocket to the lows to wherever that high would be. And I would be looking at the golden pocket area as a TP1. I would also look for more confluence. Like right now, it looks like the 786 at the value area low would be a bit nicer. Do we have any naked dailies in this range? No, not really. Wait. Yeah, nothing really. So but my overall TP, if I short this up here at like 90, between 93 and 90.3 and 90.6, my overall TP would be down here around 83,600 to 83,800. Okay, I meant a short limit order at 90. Yeah. Oh, are you talking about Solana $90? Wait, hold on. Yeah, no, shorting 90K is decent. Where would I set a TP? At the golden TP1 would be golden pocket ish. You know, I would look for confluence within that area. So let's just say we come up to 90. I'm just going to throw it. Well, if we come up this high past this liquidity grab, I think we're going to come up to here. So let's just say 90.6. This would be a TP because look at you would have internal liquidity there as well. And then maybe even I would wait. Let's say it does this. SFP here. You start to drop. You shorted this up here. If we're coming down to the golden pocket and we're seeing bull divs and we get the confirmed swing failure pattern of this low, I would pull out 50% as soon as we got that confirmed swing failure pattern. If we don't get the confirmed swing failure pattern, we kind of trade through it and chop here. I probably wouldn't take profit until we get to the 786 because that's where your value area low would be. You'd have to kind of actively manage that trade. But the overall TP would be down at 83.6. Now, be careful putting a limit order there, the normal Swede, because it could bust straight through it, and we could come up to that 92.5 area as well. So let's repull this golden pocket area from the highs at 94.6 down to our new lows. Man, look at that. You have a golden pocket right there now, too. So yeah, geez, I would even extend this box a little bit now. That's your next big resistance area for me. So shorting this, let's say you just come up in SFP, the weekend highs from last weekend into this golden pocket. I would be looking to, and then you would let's just say we come up to the 0.65. I would short upon the loss of 90.650. My stop would go above wherever that high was, and I would be targeting as a TP1 this little pivot liquidity into the golden pocket. That's almost a 7-to-1 risk reward ratio, and then my TP2 would be down here. But setting a limit order is dangerous because if you don't SFP that, you could do this little, fake out of a liquidity grab. You could come up here, reject, maybe see something like a range, and then you could keep going. Money flow does look pretty decently bullish right now on the hourly chart. Crypto Clown World, welcome in, man. Good to see you here. Did that hidden bear div on Sol already play out? Well, okay. Was that the 15-minute chart? So we do see some 15-minute hidden bear divs, but it's more likely that we are going to come up a little bit higher. Actually, we just took the highs from earlier today. I would be looking to come up a little bit higher on Solana. But technically now, this could be a 5-wave impulse. Wave 1, wave 2, wave 3, wave 4, and all your wave 5 has to do is pierce above the highs of wave 3. So we might be seeing an internal swing failure pattern of earlier today's high. But in my opinion, this is going to continue a little bit higher to hit that daily in that golden pocket and to grab this liquidity, which is more important. But the hidden bear div on the 15-minute, it's actually no longer classified as hidden bear div because we took the highs. So it would be a regular bear div. Okay, dot looks the same. Can we look at BNB? Yeah, we'll look at okay. Dot looks just as bad as Aptos. Dot's already at the bottom. I don't even think Dot really had a bull run, right? Where's my Dot chart? Yeah, gosh, look at that. Big dump. You lost your 886. This was, remember a couple months ago, we were looking at this being a possible rounded bottom accumulation range. That was actually redistribution. So you dumped, you had redistribution, and now you're dumping again here. And it's at like all-time lows. Man, it just looks so bad. I wouldn't touch this until we start seeing a sign of strength on this thing. You are coming to your midline. You might see a decent bounce from this general area. Midline was respected here. You pumped, tried to get out of it. You got back in it. These are these ranges that form around the pitchfork bands. Range that formed around the pitchfork band. Bearish backtest of the highs of the pitchfork. You front ran it a little bit. Another backtest of the highs of the pitchfork. You rejected. Tried to hold your band in here. You couldn't. Dumped to the midline. So yeah, I mean, you are at a support level for sure where you could get now a backtest here before going lower. That's an aggressive dump here. Very aggressive. B&B. Now, B&B, guys, I was telling you guys to short up here. If you guys go back and watch that video, I did a couple live streams. Go back and watch October 7th, 6th, and 8th. I was really saying we were going to get a dump. And actually, we were live when that dump occurred. And during that live dump on October 10th, I was telling you guys I was still in the short from up here. Now, I took profit way too early. I took profit at like the pitchfork band. But look at this. This was a very B&B has been very aggressive, and we came up to the top of a macro pitchfork in here. We were looking at maybe this is a wave 1, sideways wave 2, wave 3, wave 4, and then wave 5 here. Dot is coming. Why do I keep seeing Dot? B&B. I can get rid of this now. B&B's in a sideways range here, and we are at the value area low of the range on the daily time frame, and you're kind of chopping around the pitchfork band. This golden pocket at the value area high is definitely an area where I'd potentially be looking for a short. And the reason, if we look here at this dead cat bounce, let me hide this range for a second. You can see a very aggressive dump here. You got a dead cat bounce to back test the pitchfork midline. So you can see hit into the top of the pitchfork, fall through it, and then you get another high, which was actually really crazy to see, but it created some bear divs. And then you fall below the pitchfork band, 1 tap, 2 tap, 3 taps. You couldn't get above it in your 3rd tap. You dump through the midline. Back test the midline, you couldn't get above it, fall to the lower band. Right now, we're kind of trying to hold the lower band as support. And if we look at this sideways range that is developed, I was looking at it like here, but now we could even pull it more here. I'd be looking at both those ranges. But this value area high at the top of the pitchfork band might be a nice little short. Yeah, that's okay. So look at from your last daily high to the low that we made yesterday, your golden pocket retracement is going to be at the value area high. That's of our range that we've been in for the past month or so. $889, $886. But if we look at our bigger range, let me turn that bigger range on. From the dump here, the next golden pocket from that high of the rejection of the midline to the low that we made here, that golden pocket's going to be there. So your 2 major levels to look for possible rejections, pitchfork band in confluence with the value area high and golden pocket. And then I would say even this guy up here where you do have a daily level right in here at 932. You have a daily level. You have a liquidity grab of the range highs. Liquidity grab of the range highs, pretty much a double liquidity grab because those are equal highs in there. And you have your larger golden pocket. Value area high, golden pocket, daily level, liquidity grab. Next area. If you wanted to zoom in, you could even look at more local resistances. You could pull your of this last move down from the rejection of the value area high to the value area low, or to the lows that we made. And there's going to be a daily level right in there. Let's go back out to the daily where the candle bodies open and close together right here. A daily level. And now we zoom back into the 2-hour. Golden pocket daily level, liquidity here. So once again, liquidity being the most important, I would say this general area And I would actually not even look at the 618. I'd be looking at the 6.5 daily and liquidity just above the daily. And as far as the lows go, as far as support levels go, I mean, it's nice that we're starting to reclaim the lower part of the band here. And if you close your daily back above that lower part of the band, that could be a bit of a fake out. You bounce from value area low, you've reclaimed the POC, and you're closing your daily candle with a bullish engulfing candle back inside your pitchfork lower band. So I would say it's more likely that you move up to this 889 level, 886 to 889. You might get a small rejection from this spot. So it might be something like this. Reject here, come back down, back test that band, and then move up to the top of the band. All right. I'm done scalping. Swings are much better. Yeah, swing trading is definitely better, but you just have to nail them because they don't come around so often. Crypto Mine 64. I agree with you. I do think the daily chart looks more bearish, and bearish continuation is likely. In Sweden, we sleep from like now to 8 hours forward, so I'll manage the trade activity. Awesome, normal Swede, and I hope you do get some good sleep though. Make sure you get sleep there. 4 hour, 4 hour on Bitcoin. Are you talking about? BTT downward sloping resistance broken. Let's see. Yeah, I mean, I see what you mean by this, like kind of, but it's been broken and broken and broken, but we still keep rejecting on the breaks too. So just be careful with that. Will you say, "Hey, Rosie, tacos are smelling great." Hey, Rosie, the tacos are smelling great. Keep up the good work. And I really do smell them. They smell fantastic. On BTC, okay. Yeah, I agree. BTC is that downtrend is starting to break a little bit. It's okay, so you can see we were kind of in this clean downtrend here. And now we're just starting to go sideways here. So you're starting to see a little bit of exhaustion on this downtrend over the past week. Yeah, those tacos, man. I love tacos too, you guys. Street tacos, all different kinds of tacos. I love them. Luciano, welcome in, and it's good to see you as well. Weekly on ETH printing a red dot. Oh, wow. Okay. It's interesting because Bitcoin's printing a green dot on the weekly. Oh, are you using Heiken-Ashi candles? I don't see a red dot here unless ETH is breaking its descending channel too. I think ETH's going to come up to about at least take out the highs around $3,029. 330ish, let's say. Money flow looks good here. Oh, on Bybit. Huh. I'm not sure what's going on there. Maybe you mean Bybit USD or ETH USD. Does it have Bybit futures? I mean, the momentum wave's looking like it's bottoming out somewhat here. ETH to me is a little bit concerning still, either way, guys, because we've lost the midline of our pitchfork, and we're dumping here. I like this pitchfork a little bit better because we did reject from the top of it, and it's holding a support. But either way, I do think I think that if Bitcoin dumps to 74K or 70K, ETH is going to come to its macro logarithmic golden pocket between 2250 and 2160. And that's also historically a very important support resistance flip area. You can see it's a very important support resistance flip area. Daily looks okay, but money flows draining out here, and you don't have bull divs. So I wouldn't even say the daily looks super good. Now the daily candle does with that bullish engulfing candle, and that might give you a few days of a move to the upside. We could even move. Let me just zoom in here on ETH. I'm gonna hide that channel for a second. But we could even move. Let's pull from the high to the low here to the value area high. You could move to 3,200. Value area high of your sideways range in confluence with the golden pocket, and you have some liquidity. Because remember, you want to pierce above the liquidity. So the liquidity level is a little bit below it, but piercing above here into that golden pocket, I would actually look for, and if we don't do this, we could do that as well. But let's say we're not going to SFP 3030. I would say then we're going to come up to the value area high golden pocket, and then we might continue the overall downtrend. But this does look like potential. Not. It is a potential side. It is a sideways range. I don't like how we haven't taken out the lows once again. Solana finally did. You had your low, a higher low, a higher low. You're forming a liquidity trail here that could get just slashed down if we do reject, especially if we reject from a lower high golden pocket, like 3,200. Now, Solana, on the other hand, has come down. It had its initial low at 121.5. It did have the higher low. It did have the higher low. It did have the higher low, that liquidity trail. It finally came down and swept all that liquidity. So yeah, Solana might be able, now that it's taken all that liquidity out of this sideways range, make a bigger move. I would expect ETH to do something like that too. But we could push up to 3,200 first. ETH USDT, .p. I'm just not seeing that red dot, but yeah. So here's the thing with ETH on Bybit. This is the 4-year long range. You can see this goes back to May of 2021. And the value area high for the 4-year long range on Bybit is at like 31, let's say 3150, 3145, 3150, right? On Coinbase, that same 4-year long range value area high is up at 3,600 or 3,550, 3,575, I'll say. So on Coinbase, and I do follow Coinbase volume levels more, we have lost the value area high. We could bounce from this midline and come all the way back up to 3,600, where we have some very key resistance up there. Value area high, liquidity, golden pocket, and the pitchfork lower band bearish back test. But on Bybit, you can see we have lost the value area high. We have back tested that general area and the pitchfork midline, and it looks like we're going to reject here. So let me zoom into the daily now so you can get a better look at that. This is your value area high, your 4-year long range value area high. Let me pull this all the way. But to me, this looks like a corrective move. You're rejecting overall this general area with the important anchored VWAP, with the important value area high, with the important pitchfork midline. And now it's likely that we could continue down. Okay. So looking short. I'm looking to short that value area high. You know what? I think I would look to short that too, man. I'm actually going to set an alert on that liquidity grab. SFP short into GP. Anytime you see a liquidity grab into a golden pocket, it's a great setup. But now we have added confluence for a value area high. Yeah, that would be a good short, in my opinion, if you have bear divs coming up to it, right? So as we're making our way up here, let's say, we're pushing up, we reject from here, back test golden pocket. This is all a wave one because we can count an internal 5-wave structure in there. You retrace the golden pocket, which is also value area low. You bounce. You come up here, maybe a 3, a 4, and a 5. If you're coming up here with bear divs on the chart, you'd want to see higher highs in the price action. Maybe you're going to get something like this and lower highs here. Shorting into this could be really nice. ETH USD.P. Okay. I have the weekly red dot on ETH as well, both on inverse perps and perps contracts. Maybe I have my red dots turned off for some reason. Can you look at XRP USD macro? Was 2025 potentially the 5th wave going back to its inception? You know what? I was looking. So XRP USD. Let's go to the 2-day time frame. I think Coinbase was right around the beginning of this thing, right? So, but it could have been. Look at from this low right here. Let me do this. You see, this is a wave 1. This could be all a wave 2. I mean, this dump here kind of sucks it up a little bit. It could be a 1-2, 1-2. Here's your big 3, 4, 5, 4, 5. And here, I mean, it's either way, it does look like it could have been a major high, whether, 1, 2, 3, 4, 5. And now you're about to really dump down. We took out the liquidity from the November 10th lows today. Yesterday, I mean, we took that out yesterday. And we're getting a nice little bounce from that. But these lows here, and remember, these lows were very, very important lows. It was our logarithmic 382. When we bounced from here, I said we were going to make new all-time highs. If you pull that Fibonacci from the lows of wave 3 to the highs of wave 3, you turn on that 382, which bounces you in a strong trend. We have to turn it on log scale because that's more than a 100% move to the upside. When we came down there and hit that 382 perfectly and bounced perfectly from that 382, said, guys, it's likely we're going to continue up to make new all-time highs. Because remember, we were ranging within this range for months. We came down there, grabbed liquidity of the lows of the last major crash that XRP had. That was like a Sunday, February 6th, I think that was. Let me see. That was... let me just get it actually on the day. Well, it was like a Sunday night, so Monday, February 2nd or 3rd, Sunday, February 6th. But yeah, I mean, it absolutely could be, and we could be about to nuke on this thing. The thing with XRP is it ranges for a long time, pumps aggressively, but when it dumps, it dumps. Like, what was this, a 50 or 60% dump, and then like this dump was gigantic too. Can we match that to a 5th wave set on BTC over the same span? That's a good question. Let's look for Luciano. Absolutely. Thank you for showing me that. And I'm gonna I wonder if I do have my settings turned off. I'll check out Market Cipher B afterwards, but I wouldn't be surprised if the red dot is printing. It does make sense. Okay, so on Bitcoin from you said 2017, which would be well, wait, I need to go way back. I mean, it absolutely could be actually. This could be a wave one, a wave two, which retraced here like 886 Fibonacci, which is rare for a wave two, but it's not an invalidation. Wave three here. Now this was a flat, and then you got your wave four. Now let's pull this. Let's look at the Fibonacci from the lows of the COVID dump to the highs at 65K. Let's turn on our wave 4 targets, and we have to put that on log scale. Between the 382 and the 0.5 Fibonacci, and look at where that wave 4 came down to, the 0.5 Fibonacci. So that does give you some added confluence that maybe this is a wave 1, this is a wave 2, this was a wave 3, this was a wave 4 here to the 0.5. Your targets for the 0.5 are between the 382 and the 0.5. Bounce from the 0.5, and then this could be a 5 in here. This entire bull market could have been a fifth wave. The scary thing about this crypto clown world is we actually do have some confluence that this could be a major top. And the reason why, let me go on to a cleaner chart. The reason why we could be looking at that as a major top is because look at not only on the weekly time frame from last year's all-time high in 2024 to the February all-time high to the all-time highs in October, triple drive of bearish divergence, and even from last cycle, bearish divergence created this entire cycle, right? And money flow bear divs as well. Money flow bear divs. Now, if we go out to the monthly chart, on the monthly chart, this is where it gets really scary. From your 2021 all-time high to your all-time high this time, 1, 2, 3, 4 drives of bear div, money flows curving over, coming down on the monthly, bear div confirmed, between your 2021 all-time high and your this cycle's all-time high, you have bear divs confirmed. If you look at the 2-month time frame, let me just wait. How do I do this? So months, 2-month time frame. You do have, I guess it's not really showing on the MEXC chart. Where was I supposed to be on index chart? On the index chart, pair divs. Gosh, that's crazy. Money flow coming out on the 2-month, bear divs. So it's really scary. This thing could dump. And then let me show you, while we're here on the index chart, let me go back to the weekly. This here is a channel that I pulled from the all-time high at 65K to the 69K kind of double top down to your bear market lows. And even though this channel hasn't been, there's not a lot in here, but look at, even though this channel was pulled afterwards, it's respected based off psychology. The midline was respected in the mid 2021 bear market, summer mid kind of mini bear market. And then BlackRock listing busts above, flips the midline to support, pushes up. And then look at where we formed our, we tried to break out of it here in January and February. We formed a distribution range here at the top of the channel, distributed down. Then we break above it, flip it to support, and then form a distribution range here, break back inside of it. Anytime you form a failed auction or a distribution range above it and break back inside of it, this thing could really dump here. And I'm looking at the midline now as being a major support level here, those $49,000, $50,000 area, where we might See that, bounce from 70K, come all the way up to 109, 110. And look at, if we do see, say we drop to 70K, let's pull our Fibonacci from the highs, the all-time high to 70K. Let's put our golden pocket on the chart. And let's base it off log scale because it's more than a 30% dump. That's going to be around, 102, 103. But even the non-log scale one, you can see, is coming up right around the top of that channel. And once again, in terms of like retail pattern trading, left shoulder, head, right shoulder, dump. I don't want, I hope to God that doesn't happen, but there are some technicals that support it. I don't think it will. Personally, I don't think it will. I think the world is too bullish on Bitcoin, but who knows, man? Maybe the quantum computing in the next 5 years gets so good that it can crack SHA 256 and, there's a big scare from it. Or even if it doesn't actually crack it, but there's a big scare that it's going to crack it and Bitcoin really just nukes from it. Yeah, the bear divs makes me think we might end of that 5-wave set. Thank you for looking at that. Yeah, absolutely, Crypto Clown World, absolutely. Look at same stuffs with the macro divs. Yeah, this super cycle thing is a macro wrecked crypto newbies. Yeah, it's very hard, right, guys? Because the 4-year cycle has never been wrong so far. But this could be with institutional money getting in. This could be the end of the 4-year cycle. Also, with if it is a super cycle, the thing that I think is going to play out is our bigger 5-wave impulse, ABC correction, a flat correction to 70K. And then after 70K, do we start another push up? 200K, continue pushing up higher and another big impulse. And this impulse, instead of lasting 3 years, might only last another year or year and a half, 2 years. But 70K could be this 5-wave Elliott count, flat correction, which rejected right at our midline, which rejected right at our flat correction targets. So coming down to 70K, macro golden pocket. It's also your prior all-time highs. Bitcoin is historically held our prior all-time highs. Look at this prior all-time highs kind of in here, held as support. So maybe these prior all-time highs are going to hold as support, and it is going to bounce and create another thing. Yes, Bitcoin has never dropped below those prior all-time highs, really, or below the price it was trading at the halving. There's always a first for everything. This is, in some ways, a new phase for Bitcoin because institutional money is in. And institutional money trades different than the way the Wild West was back in the day. So, and the 4-year cycle, you guys, the 4-year cycle, if it still is intact, it's on time. Almost exactly, I think it's around 1,050 days, and we were 1,060 something within this area. $1,050 days it was. Let's look at, I don't know if you'd want to call that, that's 609, but let's bring it to the actual bottom. That's 854, but if you bring it to the 69K highs, 1,064. So see, 1,064 from bottom to top, 1,050. I mean, almost exactly the same ratio of the 4-year cycle. What do some other exponential charts look like? Like Amazon? Let's see here. Gosh, Amazon looks crazy bullish. Gosh, this is almost ridiculous the way this thing looks. Well, let's say we're counting it from 27 cents, you know, because this was like the listing. This was like stuff that only insiders got into. But from 27 cents, and that was in 2001, you could look at this as a wave one here. This is definitely impulsive price action. Maybe a 3-wave corrective move in a wave two. You have another impulse in a wave one, another 3-wave corrective move in a secondary wave two. So this would be a 1-2, 1-2. All of this would be a 3. This would be your 3-wave corrective move in a 4. This would be a 5. So we might need to make one more 4 and then one more 5. Yeah, if you have 2 1-2s in here, you would have to have 2 4-5s up here. But that means we could fall on Amazon. If it's done with, you could pull your Fibonacci from the lows of this move to the highs of this move. You turn on your golden pocket and we put it on log scale. You might be able to fall to 126 to 122 with some nice liquidity down there. That's going to be very interesting to see. 4 5 4 5. Bitcoin has never dropped. Okay, yeah. Bitcoin has never dropped below the price it was trading at on the date of its previous halving. That is 63K. What do you think? A breakdown would be the first. BTC has done a lot of firsts lately. Yeah, Ziggy, 3353. That is a really good point. The thing is, Bitcoin is in a different type of cycle now, a different type of history. I think it's possible. I don't think it's out of the realm of possibilities, especially with the very high time frame bear divs we have. Now, we'll know better once we get down to 70K how it reacts once it bounces. We're at least going to get some sort of bounce from this general area. It's too strong of a support. So we'll have to see how it looks. If we bounce from 70K and get like a 3-wave corrective move up to your local golden pocket, I will be looking at that as a macro lower high before putting in another macro lower low. And yeah, then I would say it is possible. If it impulses up from here, you're probably saying it's the bottom. Either way, I'll be looking for swing longs from 70K up to, 102, 110. Yeah, and BTC has never done an all-time high before the halving until this cycle. That's a good point, Bubba Trading. Also, upon the pullback after hitting the golden pocket, it usually pulls back to way far after it hits the golden pocket. This time, it didn't pull back near as much in this little pullback here, post-halving. Yeah, so not Quinker. Bear divs, you can get multiple drives of bear divs, but then when you start to get money flow bear divs as well, and the money flow starts to finally really drain out, that's when the bear divs usually kick in and take effect. And finally now we're seeing that, if this weekly money flow crosses into the red, which it could in 2 or 3 weeks, if we continue bearishly, that's when it could get really bad. If we see a weekly money flow cross into the red, it's going to be bad news. Yeah, you have to get to 70K before you can bounce from it. That's a good point, JB Hulk Smash. That's a good point. I shouldn't get ahead of the skis, right? The tacos were fire. Hell yeah, John. Awesome, man. You're making me hungry for tacos. Anyways, guys, I've been streaming almost 3 hours now. There's not a lot happening here on Bitcoin. I'm going to go ahead and call it a stream. Thank you guys all for joining. I would just be looking at this local range between like 90.7 and like 83.6. I know that's kind of a big range, but I would be looking at it, well, pretty much these highs down to this support right below us. Trade that range until it breaks. Also, you could look at the bigger range as well, this bigger range, but we focus on pieces of price action. And as we get more data, we can get more information on our bias. So for me, the overall bias is still bearish, especially with this triple rejection up here, you know. And by the way, for those of you who haven't seen this, I don't know if any of you guys are new in here. Let me just cover this really quickly. I'm gonna just hide some of this local stuff in here. That is a theoretical fib anyways. And let me just get rid of this real quick. This is a Fibonacci channel, okay? So this fib channel, let me hide these weeklies. This Fibonacci channel was pulled, and there's a reason why, a technical reason why I pulled this channel the way it was. So it was from the bear market lows up to your first major weekly break in market structure. This high right here, right? So you can see here on the weekly chart, we were in a downtrend. Lower lows, lower highs, lower lows, lower highs, lower lows. Coming up here, we double topped it, but we didn't quite break it. You made a higher low, and then you broke above it. So this high right here is a very, very important high because it was a break in weekly market structure, showing that the actually weekly bear trend, the bigger bear trend could be over, and we could be about to flip to a bigger uptrend, bull trend, right? So you pulled that channel from the bear market lows to the highs, to the higher low here with this flat correction that was in here where we took out the highs, then we came down, took out the lows. But from this channel, you can see it was very, very nicely respected, right? We were chopping around within this, between the 618 and the midline. We broke up to the top of the channel, which, by the way, I took a short from there because that was also your macro golden pocket. It was your non-log golden pocket, but it was a golden pocket in nonetheless. Let me change that to non-log. And we rejected. I remember that day. I was in Jason's Discord, and it was right after the BlackRock ETF listed. We came to the top of the channel. We came to this golden pocket. A lot of people said we're going to see a 10K God candle to the upside. I said in the chat, no, we're going to see a 10K God candle to the downside. And we got that big drop of like $14,000, I think it was, something like that. So you can see the high of the channel was respected, and then we bounced from the midline. It was a $10,600 drop. But we bounced from the midline. Then you broke above the midline. And this was important. At first, when I first had this macro channel on there, it was just the regular channel, right? But when you break a channel like this, you can put on the Fibonacci extinctions. So it's the same exact channel. I just put on the Fibonacci extinctions. When we hit 74K and then lost it in 2024 in Jason's Discord, I was saying, guys, I'm going to short this until we backtest the channel. So shorted, backtested the channel, took profit. We ended up making a lower high. I thought we were going to do this. I thought we were going to bounce and come up again and make a new all-time high around 100K. We didn't. We made a lower high, but look at, we broke back in the channel, back tested the channel right there. Let me give you guys a better look at that. Broke inside the channel, bearishly back tested it, rejected, and fell to your 618. Bounced from the 618, tried to get above the channel again. We couldn't. We formed a little bit of a failed auction up here, dumped to the midline. Midline held. Yes, we saw a giant wick past it, but midline overall held. This time we started closing some candles below it, but we were able to reclaim it. You rejected from the top of the 618. You bounce from the midline. You get above it. Then you see a three-wave correction. Back test the midline and the anchored VWAP from the low. Push up. Formed a distribution range above your channel. But when you finally closed a daily candle below your channel, that is when you saw continuation down. You made new lows. You bounced from the 618. You back tested the top of the channel. You rejected. You came down to the midline. You bounced from the midline. Formed a range above, holding the 618 as support for some time. Then we got a drop. We saw another fake out of the midline for a couple days. You broke back up, broke to the top of the channel. And this is where we had kind of a fake out, a little bit of a low time frame failed auction above the channel. And then look at, this was our all-time high range, or our most current distribution range. You tried to break above it. You couldn't. You tested it a second time, pretty much to the dollar, dropped to the 618. Three-wave corrective move, took the liquidity of the range highs, dumping. And when we were starting to lose the midline, not here, but here, I said, guys, this is going to be very bad. Because the midline was also your 74K anchored VWAP at 107K that was super important. And if you go back and watch my live streams, I was talking about 107K anchored VWAP for 2 weeks straight. I sounded like a broken record. Broke through it, bearishly backtested it. Now we've broken down from our amazing trend of the entire bull market that has been highly respected on swing positions. And now we've backtested that trend 3 times locally and rejected 3 times locally. It is scary what we're about to see, maybe. You know, we could be about to see not only that, but we could be seeing a bigger drop. It could be the start of a bear market. Let's say that. I don't know. You know, who knows what's going to happen. It's scary that we're seeing some of the stuff that we're seeing. All right, guys. You all have a great weekend. Appreciate all of you so much. I'll be, let's see, next weekend is Christmas weekend. Obviously, I won't be streaming on Christmas. I will probably stream on Wednesday. And yeah, I stream on Wednesday, and we'll see what happens with it. I'll keep you guys updated. Also, check the Telegram. If you guys want to join the Telegram, it's free. All you have to do is sign up with BYDFI using my affiliate link and deposit $100 into the exchange. That $100 is your money to trade with, guys. You will get 20% discounts on trading fees, and you can get a 50% deposit bonus. Now, once you've done that, you click the Telegram link in the description of this video. You'll type in /verify in your user ID, which is going to be right up here, and that'll get you access to Telegram. And once you're in, you guys can tag me in the general chat, ask me questions. You guys will kind of see my analysis that I'm thinking, because over the holidays, I might not make as much content on YouTube, but I will, you know, keep you guys updated in the Telegram in there. Fibonacci channel settings are as follows. Right there. 0, 618, the 1, 2.618, 3.618, 1.618, 0.5, and 2. Background, you can turn it off. You can, you know. Okay, because mine looks completely different even when I pull it from the same points. Make sure you're on log scale, Adam Hartz. You with giant moves that far of a percentage, you have to be on log scale. If I'm not on log scale, yeah. But even on log scale, look at, you rejected the 3.618, came down to the 1.618, held it as support, broke above it. Now we're back inside the 3.618. So just make sure you're on log scale, because you're seeing a huge multi-100% move. You want to be on log scale. Yeah, quick draw some squiggly lines back up to 400K. Yeah, right here. Watch. Boom. There we go. Up to the top of the channel. There we go. 400K, 350K.